I saw Morgan Stanley today have said, all clients have access to crypto now,
Ooh.
all of this. So yeah, so it's just starting still to happen. And we will see that very pervasive shift where it becomes really part of somebody's portfolio. And again, you and I have talked about this in the past. It so reminds me of at larger scale of the GSCI, the commodity index, when it went from zero portfolios to, I don't know, 50 billion in like 5 years.
And that's why I'm so bullish, because there's just not enough Bitcoins to satisfy countries' desires. I think the U.S. has 200,000 Bitcoins just, from confiscations, kind of a random.
And China has roughly the same, I think.
Yeah, and China has roughly the same. No, no problem seeing them wanting to buy 1 million Bitcoins. It's still tiny compared to their balance sheets, budgets, all that stuff. And so if you have 2, 3, 4, like say the GC wants to buy 1 million, China wants to buy 1 million, maybe Russia wants to buy some, US, like it's going to squeeze up like a watermelon seed.
Hey guys, welcome to Everyday Finance. The warnings of Raoul Pal indicate that a wave of deflation is on its way. One that has the potential to reset markets and rewrite the old economic playbook. At precisely the same time that these indications are becoming apparent, BlackRock is making headlines for selling 2,700 Bitcoins, worth a total of $292 million in 24 hours. This move comes in the midst of ETF outflows of more than $519 million. Nonetheless, BlackRock continues to hold more than 82,000 Bitcoin, so retaining its position as the largest Bitcoin fund manager in the world. It is a dramatic coincidence that the sell-off occurs at the same time as news of a private credit fraud scandal valued at $500 million that is connected to BlackRock's HPS division. According to the allegations, phony contracts and invoices were used to generate counterfeit loans. The global asset behemoth is currently being surrounded by concerns over oversight.
What's the investor base now, the new investors coming into Pantera, whether it's in the liquid side or in the VC side? What type of investor are they now, and how's it changed in the last 5 years? Because it was a lot of family offices and high net worth, right? That was the base, and then everyone got a few flagship institutional stuff they're very proud of. But is that changing now? Are we seeing an acceleration in larger entities?
We are. So you're right. For the 12 years we've been doing this, it's kind of been the same mix, high net worth people, 1 or 2 endowments, 1 or 2, insurance companies, 1 or 2 of these, the corporates, whatever. I think the difference, the election in the U.S. made a huge unlock. So we went from the biggest country on earth with the kind of leading position in regulatory stuff being aggressively negative against our industry to being extremely positive on our industry. And that's a huge unlock, not just in the U.S., but globally. And what I would say there is, as you remember in 2020, 2021, there was a lot of big public pension plans that were announcing huge, programs in blockchain. It was all very, very trendy, and it seemed like it was about to happen, right? Unfortunately, FTX blew up, Terra Luna blew up, a bunch of levered entities, BlockFi, Celsius, all, and unfortunately, quite a number of those had big, big, big public investors, right? And so it was just about the worst timing possible, is to have everyone go, hey, we're going to get into the space. And then within like 6 months, it all go terrible. And then you had the United States Securities and Exchange Commission suing the best firms in the space, like Coinbase, Ripple Labs. So like, how are you going to run that up to your IC, right? That you want to put your career risk in going, into blockchain right when all that's going wrong. That's 2-3 years in the past. And now the administration has changed, Congress has changed, and the SEC has changed. So all of that stuff is back to, I would say, neutral, right? Because as you said at the beginning, it's just the technology. Like, this shouldn't be a partisan thing. It should just be like the cell phone. We're all kind of in favor of the cell phone, right? So that's really good. And where I'm going with this is the current administration has created a Bitcoin strategic reserve, massively important, because that gives leadership to countries that are aligned with the U.S. to do that as well. So there are a bunch of countries, as you know, like the GCC states, that are pegged to the U.S. dollar, aligned with the U.S. in security matters and other things. So they're now really aggressively getting into the blockchain space.
And last time I saw you, we were both there in Dubai.
Exactly. And so if I were to roll this movie forward, we're currently raising our 5th venture fund right now. And at the end of next year, we'll be done. If we get together at the end of next year, I would say that'll probably be the big difference, is a lot of more sovereign investors, especially ones that are aligned with the U.S., like the GCC, and then even U.S., pensions, endowments, all the people that kind of, got scared away in 2022. That would be the big difference for our own fundraising. But then I think it's important to zoom out one more step. Is I think it's obvious that countries like the UAE has done a sovereign investment in BlackRock's Bitcoin ETF, publicized, and I'm sure they're mining a lot of Bitcoins and buying a lot of Bitcoins in non-public ways. So that's, in my opinion, very, very obvious. But I think the counter argument is obvious too. The countries that are adversarial to the United States are going to start buying Bitcoin. And
right.
It's not something people talk a lot about. And one of those countries is, quote, officially banned Bitcoin. But if you, think about China, right? They spent 2,000 years working really hard, saving a lot of money, and all their savings are in something that Scott Besson can cancel. That's really pretty edgy, to have all of your life savings for a couple thousand years in a security that the U.S. Treasury Secretary can just say, you know what? Nah, we're going to cancel that. So I think it's pretty obvious that the countries that are adversarial to the U.S. will ultimately buy Bitcoin and potentially other coins, but I would say at least start with Bitcoin. And so I think there's going to be an arms race, right? And there'll be like Dr. Strangelove, strategic mineshaft gap, right? It's going to be a real race. And as you know, there's only 21 million. And if a bunch of people all want to buy 1 million each, it's not enough to go around, right? And there again, that's why I'm so bullish, because there's just not enough Bitcoins to satisfy countries' desires. I think the U.S. has 200,000 Bitcoins just, from confiscations, kind of a random.
And China has roughly the same, I think.
Yeah, and China has roughly the same. No, no problem seeing them wanting to buy 1 million Bitcoins. It's still tiny compared to their balance sheets, budgets, all that stuff. And so if you have 2, 3, 4, like say the GC wants to buy 1 million, China wants to buy 1 million, maybe Russia wants to buy some, U.S., it's going to squeeze up like a watermelon seed.
Despite the significant outflows, Bitcoin has not been affected in any way. In spite of pessimistic mood and the weakness of ETFs, prices continued to rise and eventually surpassed $110,000. Analysts are currently concentrating their attention on the next breakout level, which is $112,600. This move has the potential to cause a short squeeze of $3 billion and lay the setting for a tumultuous month of November. As part of a bigger structural shift, capital is moving away from debt-heavy systems and toward hard digital assets, according to Pal, which is why this resilience is so successful. His argument is that the world is not experiencing panic, but rather evolution, which is the process of responding to deflationary pressure as fiat debt loses its grip.
Yeah, how I look at it is, yes, there's 3% inflation, but there's 8% debasement. So they're printing fiat currency at the rate of 8% a year globally.
Yeah.
So you kind of add that to the 3%. I think of it as like a 11% hurdle rate right now. So your money's getting evaporated, which is why this rush into gold, crypto, everything else keeps going. But then when you listen to Scott Besant, who's one of our macro brethren that we've all known for years, Scott is saying he wants a weaker dollar, and he needs to refinance the debt, and he needs to get rates down to refinance the debt, or the deficit gets even bigger. So it's like, okay, you can see the trap now. There's nothing they can do except keep debasing until they get through the debt refi cycle.
Sure. We've seen some people try that, the Argentines and others, right? We know where that ends. And look at countries like Switzerland that don't do that. Their currency keeps appreciating. Inflation is low, right? So that's why I think it's scary. Scott Besson's obviously an incredibly smart guy. To be advocating those policies is scary, right? And so,
but what if they didn't? That's the other thing I play through in my head. It's like, okay, fine, it's all well and good us criticizing the Fed and the Treasury. If they didn't do it, then interest payments just keep ballooning, and it just gets even worse. There's no way of cutting the deficit. Even Elon went in, and Elon can basically do anything, but he can't do this.
Yeah, so the thing you have to start with is debasing your fiat currency against everybody else's fiat currency is a race to the bottom. We can't all debase against each other, right? Like that is the problem. And I think that's why anything with a fixed quantity is surging up in price relative to the value of paper money, because every country, well, not every country, I just mentioned Switzerland's not, but most countries are accepting things that, back in the day when you and I were talking macro in the 90s, people would faint if you said, oh, Europe's going to have these massive deficits. The United States is going to be cutting at 3% inflation. People would say $1 billion to 1 against that. And now everyone's like, oh, it's all cool. Well, let's just do that. So I think that's why everything's at record prices, right? Except for paper money. And that's a graphic we put on our Twitter feed a long time ago, and it's probably on our website, is the price of the US dollar in bushels of corn, ounces of gold, shares of the S&P 500. It's the same story, right? Everyone's like, oh, it's really wild. Gold's at a record and the S&P's at a record. No, they're all kind of the same in a relativistic sense. They're not doing anything. It's the price of paper money that's plummeting. And that's why I think that, the US's policy of like, let's just debase our currency until, we decide to make iPhones in Georgia or something. I don't know if that's going to work, right? Like there are reasons iPhones are not made in Georgia.
That's their bet, is that they can get productivity up, but you've got an aging population, which makes it immensely difficult without massive amounts of AI and robots. Maybe it happens in the future. I think it probably does, but there's a very clear debasement trend between now and then, whenever then is. I tell you, here's an interesting thing about Switzerland. I looked into this. It's like, why is Swiss currency so strong? So when they all started the debasement, do you remember the Swiss National Bank bought tech stocks? And everyone was like, what the fuck are they doing? Are they a hedge fund? So when they printed money, they bought US tech. So they avoided the debasement by owning the best assets in the world to own.
Yeah. And literally, the Fed did the polar opposite. What did it buy? It bought $9 trillion of mortgage bonds. The U.S. Fed did 200% of all mortgage lending in the United States in 2020 and 2021. What happened? They drove the price of every home in the United States up 40% and disenfranchised everyone who doesn't own a home, right? For you and me, we're older. We have some stocks. We have some real estate. It's probably great. What the Fed's been doing, but it's terrible. The majority of Americans are under 40 years old. Fed's not serving them at all. Like all this cutting, hiking the cost of apartments, the cost of buying a house, it's unattainable. And frankly, I think the feedback came in the election. Young people voted for the candidate that was pro hard money Bitcoin.
And the other thing is, when I look at it, is the real problem is wages kind of go up by inflation or GDP growthy sort of thing, while the assets that they want to buy, like houses, go up by debasement amounts. So it just gets more and more expensive and they never catch up. And it just makes people angry.
No, it's true. And that's one of the reasons why you can't cut Fed funds right now, because the core CPI rate is 3.1, 35% of that is shelter, right? And housing's still ripping, and apartment rents are still incredibly expensive. So inflation's very sticky, right? Because those things are real costs. And you're right, it's not even including, other things that are skyrocketing. But there's at least a year or two's worth of kind of lagged owner's equivalent rent flowing through CPI. It's going to be, inflation's going to be very high for quite a while.
And then, so that setup of the endless debasement, the sticky inflation, the lack of the productivity increase in yet, just means that it's just pushing people out on the life raft. So it's between gold and Bitcoin. And we've seen just dramatic flows into those. As people, even JP Morgan talked about the debasement trade. I mean, we've been talking about it in crypto for fucking 10 years. And finally, they've like, oh, they're debasing currency. I'm like, finally.
That is so funny. I literally sent an email to our head of content this morning, forwarding, JP Morgan's talking about it. And I got an email from Goldman today, the debasement trade. How do you play the debasement trade? I'm like, I've been talking about it for 12 years. And so, yes, we were there early, but let them get the glory. They're all talking about it now. It's kind of like, when your colleague did the BRICS acronym. I heard that yesterday in a meeting. The BRICS, Goldman Sachs coined that phrase in the 90s. And so, it's now the debasement trade TM. They have a trademark on it now. But it's great. that it is a trade, because I think we need to think that way. Like, that is the macro issue right now. Every government is printing way too much paper money. A third of the landmass of the earth is covered with trees, right? So there's no stopping the printing of paper money. There's plenty of paper out there. So it's coming, and that's why everything's surging, including gold, Bitcoin.
And so here's one for you. You might not have seen that. We use a global macro investor total global liquidity index, right, as our benchmark for debasement. The Nasdaq, since 2012, has a 97.5% correlation, and Bitcoin is about a 90%. So what you've got is the most single dominant macro factor in our entire investing careers.
Yeah.
We've never had one factor, because, you know, before we used to run diversified portfolios and we'd be figuring this stuff out. None of it matters. It's all one trade.
Yeah.
Which makes it super easy. I think it's the greatest macro trade of all time. You know, we've both been in it, you particularly, for a very long time. It's so simple once you see it through those eyes. New normal for them now. It's like, oh, fine, we'll just use the magic money printer, and it all kind of goes away without realizing the stress they're causing on like particularly young people, poor people, everybody else in this whole equation. It's fine if you own assets, but it's not. But what's interesting is we've all said that this was the first chance in history retail got to front run the institutions, and it's playing out perfectly. Anybody who held on from any time over the last 10 years, front run everybody. So now the banks are now like openly saying it's debasement. And what that's telling me is I still think it's early in the narrative. I saw Morgan Stanley today have said, you know, all clients have access to crypto now,
Ooh.
all of this. So yeah, so it's just starting still to happen. And we will see that very pervasive shift where it becomes really part of somebody's portfolio. And again, you and I have talked about this in the past. It so reminds me of, at larger scale, of the GSCI, the commodity index, when it went from 0 portfolios to, I don't know, 50 billion in like 5 years.
The cryptocurrency market as a whole is experiencing difficulties, but Zcash has managed to steal the show. In October, the privacy coin experienced an over 500% increase, reaching a peak of approximately $390, which is its greatest level since 2018. The rise started after Naval Revecant referred to Zcash as insurance against Bitcoin. This was followed by aggressive projections by Mert Mumtaz, the inventor of Solana, and Arthur Hayes, the co-founder of BitMEX, who projected objectives of $10,000. It is similar to the fear of missing out FOMO that drove the price of Dogecoin in 2021. Rising wedge on the charts is a possible indicator of a likely 30% decline toward the $260, $270 zone in November. Despite this, warning indicators are become more and more apparent. What will become clear in the coming weeks is whether Zcash's reappearance is either a passing craze or the beginning of something more permanent.